Hi and welcome back to the channel. And today guys, we're talking Bitcoin. Okay guys, as we get into today's video, if you do find it useful and informative, smash that like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. If you haven't yet joined us in Discord, what are you waiting for? Check it out, linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. So why not go ahead and check it out? Let's go ahead and jump down into the latest news for Bitcoin and take a look at what's been going on in the crypto space. Okay guys, so straight off the bat, let's jump right into this one. So persistent macro headwinds could delay a Bitcoin bull market. This is from ARK Invest. Some interesting kind of things that are talking about in here. Specifically around kind of macroeconomic status of things. Long term, they're bullish and kind of sits very well with what I talk about on the channel as well. And we're short term bearish. Okay, so pretty much aligned to kind of what I've been talking about for quite some time. Essentially here, their view on Bitcoin long term is very bullish for the obvious reasons. And of course, there are some issues with kind of the shorter term, right? This is all to do with the interest rate hikes and essentially where risk assets have historically been as well. So some interesting kind of stuff, but the most interesting part of this article really is all about how actually they're very aligned to kind of what we've been talking about for several months at this point, is that, you know, we're experiencing this bear market rally in 2023, but it is not really a bull market until these risk assets essentially start to cool off a bit. It's hard to kind of get bullish on the market. We need to see a few additional things, right? And I think for the most part, it's quite interesting to see that there's other prominent firms out there, specifically, you know, an asset manager like this has $13.9 billion in assets, and 𝗕𝗘𝗪𝗏, who is, you know, very, very bullish on cryptocurrency and all that kind of good stuff, right? So I think it's interesting to see that these people, just like myself, who are bullish on crypto long term, do see that there is weakness out there and we are in bearish times, not bullish times. And this is also something that we can then go into from Bloomberg strategists as well. They are also talking very similarly, right? They're essentially saying that stagnant Bitcoin price is hinting at incoming market turbulence. Now, this one's really interesting because it essentially notes how risk assets only did really well in terms of getting the price to those really buoyant numbers was basically just through low interest rates. And now obviously we have high interest rates. This isn't necessarily a good sign. In fact, they're saying that there's weakness here because Bitcoin has dropped 15% in the third quarter to September 1st versus a 2% gain in the NASDAQ on 100 stock index. Essentially what this is saying is that in relation to the stock market, we can see that there's a lot of weakness in terms of cryptocurrency versus that. And it's quite interesting that you have this decoupling from time to time. And so if we see a correction in the stock market, we're likely to see a correction in the cryptocurrency market. And essentially, until we start to see a pivot, we shouldn't really kind of get too I guess, bullish on the crypto market. We can have some short-term trades and go long in places and go short in places. But for the most part, the bear markets are all about building positions or trading and actually acquiring and draining liquidity out of the market. Essentially, this is what the institutions have been doing for quite some time. And we'll probably talk a little bit about that in a moment. The other thing that kind of jumped out at me was this one, and I kind of disagree to a point with this one. And unfortunately, yeah, it's one of those things. I guess it's just how I perceive the market versus other, YouTubers maybe looking at the market. And so let's jump into this for a second, right? So basically, the idea here is that you're bullish on the market. And institutions who have been selling essentially are going to be forced to fight over what is remaining, right? And that it doesn't sit right with me. It's not how these things usually work. If we just think about the animal kingdom, right? You usually have the alphas of the pack, feasting first, and then the runts of the litter essentially, fighting for scraps that are left, right? And so if we kind of spin that around on the crypto investors, then we're saying that the institutions are basically the runts of the litter and the retail investors are the alphas. And that doesn't quite sit right with me. Essentially, institutional investors act without emotion and are more calculated in their approach. To me, institutions have usually been the alphas of the market, with retail investors who overreact to price movement and act emotionally in the market being the runts of the litter. Don't like the terminology. I don't like saying smart money, dumb money, and all these kind of things, because I am a retail investor at the end of the day. I'm trying to be more logical about my approaches. And so when we have this kind of article here, which is basically just regurgitating a YouTube video. What it's basically doing and assuming is that the short-term price being held, as in 95% of all Bitcoin hasn't moved in the last 30 days. That's okay, right? That's a short-term window, a 30-day window. And if it hasn't moved in the last 30 days, that doesn't automatically make us bullish long-term, okay? And so it's quite interesting. Okay, and we can jump this down and take this down a little bit more to areas where I do agree, where we can see that the hodl waves, it's just something that we used to cover quite a bit on the channel, and does indicate that there are some long-term holders or people who have lost access to Bitcoin. And it is a very significant amount of Bitcoin that has been held in those wallets for a very significant period of time. That does not, however, kind of mitigate the risks that are out there. And that, what we're going to do, and to kind of cover that off in a little bit more detail, what we're going to do is we're going to come on over into the world of data. And so I can try to explain this. That's the wrong one. Let me try that again. Bring this one up. So let me try to explain this in a way that will hopefully make a lot more sense. So membership.cheekycrypto.io is our membership website. This is where we hold all the on-chain data for your access. Now, there's a 7-day free trial. You can access many different things here. Like the data that we're going to go through today is a part of a data perk, which you can add on separately through the checkout process. Again, it has a 7-day free trial associated with it. Plans start from $14.99, and I think the data perk is $9.99 on top of that. So essentially, you'll be talking about $24.98 to get access to the data perk, right? But there's obviously a whole host of other things that we have in here, and the access to absolutely everything comes in at $49.99 for a month. The 7-day free trial, just if you don't want to continue it, go to your profile, subscriptions, cancel. If you do not cancel, you will be charged all that kind of usual stuff. Let's go ahead and jump into the data zone, and here we've got Bitcoin data. I'm going to go bring that up, right? I am adding more data to this. So over the next few weeks, this is going to change a little bit and it's going to be a lot more inclusive. So do watch out for that. So let's jump into it. We have the overview. This is pretty standard stuff, like we're 61% down from the all-time high. The all-time high was $69,000. We have 485,000 transactions in the last 24 hours at $639,000 to do those transactions, 940,000 active addresses in the last 24 hours. And let's just kind of focus in on 49.3 million addresses, right? Accounts that exist for Bitcoin. So a very large number, right? And a lot of this overview can sometimes be misleading. Okay, so when we kind of look at this, we think, oh, wow, there's a lot of accounts, 49.3 million. That's fantastic, right? And we come into the wallet side of things, and we can actually take a look and say, okay, well, do we actually have significance within those parameters, right? And well, we can see here on the low side, the wallets that have over 0.001. So you'd have to have a reasonable amount of Bitcoin in terms of dollar value to kind of consider yourself an active wallet. If you do not have more than 0.001 Bitcoin in that wallet, then you can't really be included in this bracket. Yeah, in fact, you'd fall out of this bracket. And so this particular low-level wallet here, there's 23.8 million. So we can argue straight off the bat here that although there's 49 total accounts in existence, actually only 23 million of them have a Bitcoin in there that's actually, resembling some form of meaningful level, right? Outside of that, there's nothing in there. And therefore, actually, it's less than half the wallets that are actually, counted in that overview that actually have Bitcoin in them that I think is something that we can contribute towards the markets. So it's an interesting one to we can actually say, probably we only have 23.8 million wallets, not 49.3, right? So we know that there's a discrepancy there, but if you start looking at the Bitcoin that's held in the wallets. Now, when we go up in these brackets, and the reason that I wanted to kind of talk about this a little bit was that we had that article, right, basically saying that, that you're going to have the institutions fighting over just 5%. And that's not how this is actually going to work in my mind, right? So we come back to our data here. We have institutional level investors. We'll argue that an institutional level investor should have more than 1,000 BTC. Okay, most typically they would have 10,000, and you obviously have people like MicroStrategy with 100,000 or more, right? And so we can see that there's basically 3 levels here of wallet counts that are institutional level. The 100 Bitcoin or more is actually more traders, so you have professional level trading going on in this particular area. You can argue that maybe that's also institutional, but for the most part, I separate these guys and I isolate them as the middle ground between the retail investor and the institutional investor, because they do not actually hodl it. They basically buy and sell, buy and sell, buy and sell, and for the most part they haven't really done anything unusual in regards to how they've been operating. It's almost like this middle ground is getting less and less, and essentially people are either on the retail layer or on the institutional layer, and there's very, very few people that are essentially trading, and it's getting worse by the year. So there's a huge division between the two. Essentially, that gap is widening. Now, when we start reflecting on this, well, what am I actually talking about? Well, we have retail investors that hold, 1 million Bitcoin, but essentially actually a lot more than 1 million Bitcoin. If we take a look at 10 Bitcoin or more, which is your high net worth individual, there's 157,000 wallets, right, that have 10 Bitcoin or more. And so we can argue there's 1.5 million Bitcoin sat right there at that particular level. Then we have another 1 million Bitcoin sat at 1 Bitcoin or more per wallet. There's 1 million wallets, 1 Bitcoin or more. There's over 1 million Bitcoin sat there. So we know that it got to 2.5 million Bitcoin just sat right here at that retail layer. And then, of course, you can go down deeper. There's 4.4 million wallets that have 0.1 Bitcoin. So again, you'd ask you, there's another 500,000 there. Okay, so we're at about 3 million Bitcoin. 3 million Bitcoin sat with retail investors versus that is sat up here at 1,000 Bitcoin or more. We have 2,000 wallets. Okay, there's 100 wallets here that have 10,000 Bitcoin. And so why am I talking about this? I'm talking about this because we see that the institutional level investors have been decreasing their positions over the bear market. They've been selling into the pumps, whether that was over in January of 2022 all the way through to the highs of March 2022, through to the June to August 2022, where their liquidity was provided there, and of course 2023, where liquidity has been provided for these guys to exit their positions. You can see the negative marks on this particular wallet count, right? So 365 days, 180 days, 90 days, 30 days, 7 days, all in negative positions. This essentially means that they've been using the moves to the upside to exit their positions, right? And where's it been going? It's been going to the retail layer that is on positive positions. 365, you can see is up 12.98%. And so we've got 3 million Bitcoin sat potentially with retail investors that have been accumulating during the bear market and basically buying the pumps and the dumps. Okay, there's no major moves to the downside on these wallet counts anytime soon. We haven't seen any moves to the downside. And so what we have to consider here is how typically, right, we have the behaviors of these different demographics, right? So for example, we have the retail investors that typically, okay, not always, but typically overreact to price movements, act emotionally and panic or panic sell or buy in greed, right? Thinking things are going to the moon. And so what historically has happened is these guys basically succumb to selling pressure for many different reasons. Now, it's not all retail investors, okay? And if we were to just kind of say, okay, well, if retail investors sell 10% of what they hold, that's 300,000 Bitcoin entering the market. If they sell 20%, we're talking 600,000 Bitcoin, right? And so if we did start seeing, a 20 or 30% reduction, we're going to see a lot of Bitcoin entering into the market that is going to suppress the price, which means that are our institutional investors only fighting over 5%, or are they in fact going to be actually doing exactly what they've done historically, buying the Bitcoin back from the people that they sold it to, but buying it at a discounted rate, which typically is what tends to happen, meaning that they're not fighting over 5%, because I think essentially all they're doing, and they will wait it out, they'll wait for those retail investors, not all of them, 20-30% of them selling their Bitcoin. And when they do sell, there is going to be some buying pressure from the institutional investors. Typically, this is how it's worked in the past, and I think it's what's going to happen again. Now, was there going to be a catalyst for the major moves to the downside? I've often said before, I think property is a problem, and there are some people out there that do not think that property is a problem, but I do think that the property has got some major issues and cracks occurring. I know it's being covered up by some changes in legislation, specifically here in the UK, where we see commercial property can now be converted into real estate or rentals and residential property. But for the most part, we do see there's a lot of demand for medium to small houses with an abundance of supply on the larger side. And this is also a recipe for disaster, because we do see that there is a downsizing issue going on. Not enough houses are being built at the moment, but I do think that we are going to see essentially a big kind of capitulation event for the housing market. We've seen Evergrande obviously go and file for bankruptcy, which is going to have a knock-on effect as well. We see so many different things around that sector that could potentially cause retail investors a little bit of panic, and they might start selling. Again, a Fed pivot, historically speaking, has seen a crash in the stock market of around 50%. So again, that could also be another catalyst in the market for moves to the downside. You might be thinking, why would a Fed pivot where they actually start reducing rates cause a crash? And it's because they pivot when the damage of the interest rate hikes are at the highest, meaning that they've sucked so much liquidity out of the market that retail investors typically need to start selling their assets to survive month on month. More and more people are living paycheck to paycheck. We cannot ignore these factors either. Interest rate hikes are high. We have interest rates high. We have all debt at all-time highs, savings at all-time lows. There is a catalyst here just bubbling in the background, just waiting to wreck retail investors, in my opinion. But like I said, I'm not expecting it to be all retail investors, just unfortunately the most vulnerable. Which brings me over into the world of liquidations, which is this one actually. We've seen $32.3 million of Bitcoin liquidations in the last 24 hours. Bitfinex is the exchange with the most amount of liquidations at $8.2 million. This is unusual activity for Bitfinex. Okay, BitMEX is also higher in the ranking than you would expect to see it as well. Now, there's many reasons for this. And it could be very legitimate, or it could be some big worrying signs about potentially liquidity-based issues at these exchanges. So $8.2 million on Bitfinex, $7.2 million on OKX, and BitMEX is at $5.3 million. To put this into context, Binance is usually quite high, and it sits at $4.8 million. We see Huobi at $3.5 million and Bybit at $1.9 million. Essentially, it's very unusual to see Bitfinex and BitMEX as high as it is. Now, the other part of this that's important to kind of keep an eye on is the ratios between longs and shorts that are getting liquidated. Bitfinex is actually pretty well balanced. However, there are some unusual things. Up in the top right-hand corner here, we have the average amount of long positions and the average amount of short positions that are liquidated across the exchanges. As in, if you take all the liquidations, 76.92% of them were short positions and 23.08% were long positions, right? So when we start comparing exchanges to this benchmark, what do we see? Well, we see that Bitfinex actually liquidated a lot more long positions than the average, which was 23%, meaning that it's very unusual activity there. And only 59.56% were short positions, right? And so that's a little bit unusual. Not as much, though, as BitMEX. BitMEX was 0.13% long and 99.87% short. Again, it's way out of kilter to what the average is. So it's a bit unusual, and it kind of makes me wonder what on earth is actually going on there at that exchange. Again, it's possible that they had an an API issue and the data that was fed through was incorrect. That's one thing to consider. It's very unlikely, though. Those kind of things do not typically happen. The most likely scenario here is that that's actually what happened at that exchange. And, well, there could be reasons and rationale behind it. But for me, like I've often said, it's not what I would like to see in the space. So for me, I use cold storage, ledger device, linked in the description below. And I use that to basically not keep my crypto on the exchanges. Keep it offline, keep it in a cold storage device, and you don't have to worry too much about what's going on from these exchanges, whether they are solvent or insolvent. Okay, some interesting things. Now, as you guys know, I am a big on 𝗕𝗘𝗪𝗕. 𝗕𝗘𝗪 is my go-to platform at the moment. It's where I use for 100% of my leverage and 90 to 95% of my spot trades. So if you haven't yet signed up to 𝗕𝗘𝗪𝗕, why not check it out? The affiliate link is in the description below. If you do use that link, you are eligible for up to $8,000 of rewards, depending on how much you deposit and trade on the platform. Now, they are introducing KYC, as many of these exchanges are. And if you are looking for an exchange that does not have KYC, then why not go ahead and check out BTC, also linked in the description below. This exchange is fully regulated in the US and in Canada, requires no KYC. The only downside is that this exchange does not have spot functionality or a spot market. This is specifically a futures market. So if you are looking for an exchange that you want to use for futures and you want to do some leverage trading, then why not check out BTC. Link is in the description below. Again, if you do use that link, you are eligible for some rewards depending on how much deposit and trade on the platform. And again, no KYC. So this is fantastically positioned for all you US and Canada based users that are kind of scrapping around trying to find a good exchange to use. This one is fully regulated in the US and in Canada, so why not check it out? Link is in the description below. Let's go ahead and jump down into the analytics for today, starting things off with the 1 hour time frame for Bitcoin. So Bitcoin paired up with USDT on the 1 hour time frame. 𝗕𝗘𝗪𝗕 is our data source here. So we were expecting a move to the upside, right? We were calling out 26,171 to 26,363, and we actually pushed up a little bit higher here. So this actually does put us into a position for a WXYXZ. So I just want to do some sense checks to see where we currently sit with this one. So we are going to actually take this down to a 15-minute time frame. Yeah, that's cool. I just wanted to see how this move here was. Bring this back up into the hourly. So we moved up and then we came down. So essentially what we've got to do here is pick up the high using the fib. That's it. Just move that across there a little bit. And we bounced down to here. And yeah, so we are in a W, X, Y, X, and Z. It's not impulsive or anything like that. So we should expect W, X, Y, X, and Z. So a little bit further to the upside to be had inside our C wave total. Okay, and we could argue that maybe there's a little bit more to it and we come down and push up and this is actually a W, X, Y, X, and Z, but I don't think that's necessarily going to be the case. We're not impulsive, which is the main thing. It is all corrective. So let's go ahead and find out where we should be targeting on this move. Let's go ahead and do that. And yeah. Okay, cool. So at the moment, I think we've still got to come down a little ways. I don't think we're necessarily done just yet. And I'm going to approximately put this around that 200 EMA because I think that's where we're going to find support. And then we should target out a area right here. It's going to be pretty broad because the Z wave can be so many patterns, but essentially we're going to be between 26,414 to 26,831. That will be where we should then get rejected and move to the downside. But this is subject to coming first down to the 200 EMA. If we don't come down this low and we just rally on up, it will be slightly higher. But for the most part, that's where the hourly chart sits. It's still in its corrective stage upwards. From a daily standpoint, we are, of course, still bearish. There's nothing here that's changed that. We are still looking for that fifth wave move to the downside, 22,696 to 23,875. Essentially, that there does and would complete a 5-wave pattern, meaning that we'd bounce up and then drop down again into another 5-wave move. Essentially here, unless of course price rallies up higher than 28,588, this is the structure that we have to adhere to. Okay, we know where we want to go. If we want to break this structure, we have to move up higher than 28,588. And if we do fail to do that, then of course we do move on down even deeper. Okay, so for the most part, this is unfortunately where it sits on the daily time frame. Our stochastic RSI is high. It's not overbought though, so we can still expect a bit of a move to the upside before we pull on down. Again, we are already overbought on the 8 and 4 hour time frames. So yeah, we are just basically looking for corrections down. Like I said, we might rally on up a little bit ways higher in that Z wave on the hourly. That will actually line up more towards our 200 EMA, and it does look like we're about to cross the 50 and the 200 on the daily. Taking a look at the weekly, we still find ourselves finding support on the 200 EMA here on the weekly time frame. So essentially, we'll be looking for the weekly close, seeing whether or not the bulls or the bears are going to take this into a positive or negative position for the week ahead. Nothing much has really changed at this point in time on the weekly time frame. So yeah, we just have to sit back, wait, and see how this one plays out. Guys, I think I'm going to wrap this video up right there. If you have found it useful and informative, smash that like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. Until the next one though, guys, have a fantastic day.